Boy, that time flies when you're going back to $100 a barrel. Welcome back, boys and girls. Joseph James here, School of Trade. Yeah, don't adjust your television sets, kids. That's 113 today on crude. Finished up the day with a nice short covering rally on the crude oil futures, but just like we had anticipated, right back to where we started from before this whole snafu in Crimea. In tonight's newsletter, crude oil, big selling opportunities. Gold gets shaken up by the ECB this morning. Were you paying attention? Did you see that? We talked about that last night. And of course, another range-bound day on the mini Russell. Last night, we gave you guys some trades to look at last night. We're going to talk about what happened in the markets today. We're going to take a look at this day in history. I know, one of my favorite times in the newsletter. And then we have a very important prep for tomorrow's non-farm payrolls. We'll talk about what's on the calendar for tomorrow. So stick around. We got another great nightly newsletter here for you. By the way, I want to thank you all tremendously here for spending the time to send me your feedback. Your feedback was so important to me, so I thank you for your feedback as we continue to improve on our nightly newsletter. We brought back the second half of our chart analysis, so stick around for the second half. It's at the end of this video. No need to go anywhere else. And don't forget, I'm reviewing crude oil this evening. If you want to get the gold and the Russell charts, just log right into your SchoolOfTrade.com membership site, all right, and check out the charts there. Let's get started here. Now, first of all, had a very busy day in our live trade room. A little bit slippery at the beginning. All right, but last night, let's rewind the tape. Let's go back 24 hours ago. And last night, we talked about selling opportunities on crude. And I gave you specifically a target at 130. Now, we got through that target today, down around 113 before we see this short covering rally on crude today. But what I want you guys to remember is that last night's newsletter, I gave you specific information about what I was looking for, right, to be able to get into that trade short and use that profit target at 130. So crude, easy selling opportunities here today if you knew what you were looking for. Now, even easier was this short covering rally right at the end of the day today on the crude. So whatever we see, these big drops in prices, remember, those sellers are going to take their profit. Look for that short covering rally towards the end of the session today. Gold. Don't say I didn't warn you. Don't say I didn't warn you last night. 24 hours ago, we talked about the ECB's rate decision today. And of course, what did I say? I said, be careful because before it's going to be slow, but after that ECB announcement, don't be surprised if the old metals go bonkers. And that's exactly what happened. So Draghi this morning starts his press conference at 8:30, about a half an hour after the announcement came out. And he starts talking about the typical stuff, accommodative policy. So, of course, the ECB says we're going to keep things nice and loosey-goosey here in the ECB to keep this recovery continuing. No new programs. They didn't change the rates at all this morning, but it was the commentary after that got people buying gold. So just like I said last night, if you're a gold trader, you got to be paying attention during these ECB announcements. There was easy money to make on gold this morning if you knew what you were looking for. And we told you about it last night. And then, of course, another disappointing range-bound day on the Russell. Well, I guess disappointing if you didn't know what to do when you see that. In our trade room this morning, we immediately identified the range-bound market. And we found bottoms and tops and bought lows and sold highs and well, pretty easy to make money in a range-bound market, but of course you wouldn't want to trade the Russell today like you traded crude. If you tried trading crude oil the same way as you traded the Russell, you would have lost a bunch of money today. Vice versa, right? You couldn't trade the Russell like you were trading crude because there was no trend on Russell. How do we know that, by the way? Well, remember, in the chart prep this evening, I'm going to talk about putting that stamp of approval at the opening bell tomorrow morning. So we take a look at the charts from today. We project what we're expecting tomorrow, but then it all comes down to what happens right when the opening bell rings, the first 15 minutes of the session. That tells us exactly what's going on. So that was the clue that we used this morning on both crude, gold, and Russell. So waited for the ECB to get gold moving. Crude kept selling off. I'm really surprised we didn't hit that triple zero, right? 100th 0.0. So I'm surprised we didn't get all the way to 100, but we made a pretty valiant effort to get down there. And again, Russell, we're hoping tomorrow, I think everybody today was waiting on that Russell to see what tomorrow's non-farm payrolls will be. So hopefully tomorrow we get a little bit more action on the Russell. Hey, I'll take the sideways ranges, guys. I don't need trends. We'll take sideways ranges all day long. The key is not trying to buy the breakout of those ranges and fading the breakouts, which is exactly what we did today on the Russell. Markets today were, for the most part, pretty red hot. Russell was the sleeper today. Russell only moved 83 ticks. It was down about a sniffle, 0.15 percentage points. Still, though, on this Russell, the Russell holding above 1,200. This is a very important thing. The fact that we've been able to stay above 1,200 before tomorrow's non-farm payroll report is a big boost of confidence for the buyers on the E-minis right now. 83 ticks, nothing to sneeze at. It's a very small range today on the Russell, and it made for, well, very easy range-bound trading. But if you were trying to find a trend on the Russell today, you were going to be looking for a long time. Gold was another big mover, but crude came up in second place. Crude had 195 ticks of range today, so a modest move on crude today. Crude is usually going to get just between that 175 and 150 ticks every day, so a relatively wide move. What was amazing, though, was that you look at this chart, right? This is your crude oil chart here. You can see that almost straight line down. But then at the end of the day today, we saw a short covering rally, which is why you see an actual positive number under the, next to the crude number there. So almost 1% higher, but that was because it opened, went lower, and then short covering rally back up. Apparently, crude traders getting out of their positions before tomorrow's non-farm payrolls. That's what we're left to assume here this evening on crude. So if you're wondering why did that price jump at the end, it's because ever since we got that press conference on Tuesday morning from Russia, right, from the Kremlin, we talked about that, backing out of Crimea. Well, ever since that happened, you can assume people like me were short crude. And of course, we're not going to hold those positions into tomorrow's non-farm payroll report. All right, we'll talk more about that in just a little bit. So mini Russell, small mover, crude, relatively well moving today. Gold was the big mover, up 1%. 226 ticks today on gold, above 1350 closing bell today on gold. Again, we know what happened on gold. The ECB press conference, Draghi says accommodative policy, that means more printing money, that means loose interest rates, right? That means gold's going to go up because currencies should go down, right? Euro dropped like a rock today in comparison to the dollar. So market's busy today, range bound on Russell, had a pretty good day on that today. News today. Again, ECB rate announcement, that was the big mover on gold. That came out at 8:30. Jobless claims came out at 8:30 as well. Jobless claims actually showed a 3-month low today, but I think everybody is kind of sweeping that stuff under the rug right now, waiting for tomorrow's non-farm payrolls, factory orders. Boy, I'll tell you, the manufacturing sector really got its you-know-what kicked over the past 90 days. Manufacturing numbers, PMI, durable goods orders, factory orders, the list just goes on and on and on. This news just getting killed by Mother Nature. Mother Nature really making it difficult to be optimistic about the U.S. economy right now. But I think, though, that most people now have kind of written that weather off, and they're waiting to see what the good weather reports come out as. We may have one of the biggest rebounds in U.S. history come spring. Just you wait. End of this month in March, after we get through quad witching, so last week of March, April and May, I would not be surprised if we have a thawing out, right, no pun intended, of the news here, and we just see this thing go straight up. So I wouldn't be surprised at all. And then, of course, it wouldn't be a newsletter without an update of our good friends in the Ukraine. As of right now, and this is just amazing because it just goes to show you that you can't trust the average news media, right? You really can't trust the media because earlier in this week, we never heard about this stuff. But now we're finding out today that Crimea actually wants to leave wants to leave the Ukraine. I won't voice any opinion on that. I'm not from that area of the world. But basically what's happening right now is that Crimea Parliament today voted, I think it was 78-0. It was a unanimous vote in the Parliament in Crimea to, of course, break free of Crimea, of Ukraine, and become part of the Russian Federation. Of course, the Ukraine, they disagree. U.S. and the EU, they are now throwing out sanctions, and Russia's saying, you sanction us, we're not going to do this, and it's just back and forth, back and forth, back and forth. Pretty typical at this stage, of course. A lot of strong words coming from every side. It'll be interesting to see what happens because there's quite a bit of past, right? There's quite a bit of history that most of us, I don't think, in the Western world really understand. So I will keep my opinions out of it for now, but just be aware, though, we're still hearing some rumblings, right, coming out of Ukraine right now, and it's kind of escalating here now, going to the EU and, of course, the United Nations. So we'll see how that goes. We'll see how that goes here into next week. This day in history, one of my favorite times of the newsletter. Now, this is kind of a good day here. Yesterday was really a disappointing day for this day in history. Tonight, though, we got some really cool stuff here. March 6th, 1899, over 100 years ago. Over 100 years ago, 1899, Frederick Bayer and Company invents and patents the first patent for aspirin. This is a German company, but there are some rumors surrounding this patent. At the time, it was rumored that a Jewish man actually invented and was about to patent the aspirin, right, to patent aspirin. I can't remember what the actual compound name was. But basically, aspirin for hundreds of years had been known but couldn't be swallowed, right? And it couldn't be digested. Well, sure enough, somebody, right, and there's rumor because of Nazi Germany at the time, that a Jewish man actually created this invention, found a way to allow a human being to actually take this orally, and it was quickly embraced by the medical community. So pretty cool, though. Now, Bayer eventually lost that company, bought it back. Take the time to read about Frederick Bayer. There's a link right there on the blog tonight. It's amazing, the story, because here in the U.S., we're very familiar with Bayer aspirin, right? But it didn't get to be Bayer aspirin very easily. I won't bore you with the details right now, but I found that to be very interesting, how they actually lost it. The U.S. went to war with Germany, confiscated all. As you can imagine, it is a long story, but one definitely worthy of a read. And then, of course, happy birthday to Alan Greenspan, right? Alan Greenspan, one of the masterminds behind the current central banking strategies that we see today. Alan Greenspan was one of the first people to ever say, we can do better than an open market. I know. I'm definitely an open market guy. I believe in letting bad businesses fail. I believe in letting bad politicians lose. I don't believe in propping up economies. My personal opinion. You're entitled to yours too. I would have let the auto companies fall apart. I would have let the big banks crumble. Good example, the country of Iceland. The country of Iceland was the first country to ask for bailout money, right, from the whole world. And it was, we're too good to do that. We don't want to give bailouts. Well, sure enough, bailouts came for everybody else afterwards. But Iceland was a great example of an economy that took it on the chin. They didn't bail themselves out. And sure enough, they're one of the fastest growing economies in the world right now, thanks to, of course, free market policy. Well, Alan Greenspan, back to the topic here. Alan Greenspan was the first central banker to ever put together this monetary policy twist where they would raise interest rates, lower interest rates, they would buy debt, right? It was a way of stimulating the economy. Basically, Alan Greenspan knew that an economy that was moving too quickly would get, too hot and it would burn out, right? Inflation, prices would go too high. He also knew that an economy that was drowning, right, by deflation, lack of growth, could be stimulated by lowering interest rates, right, by making cash more readily available. Now, of course, whether your opinions are pro or con for that type of environment, Alan Greenspan was really a maverick in his day. Happy birthday to him today. Here's a very cool one. 1930, this day in history, 1930, Clarence Birdseye. Man, I need a name like that. Joseph Birdseye. That's got a good ring to it, doesn't it? I like that. Clarence Birdseye invents the quick freeze technology. Yeah. And the freezer aisle of the grocery store was never the same. So quick freezing technology actually had a piece of fish that would go on a conveyor belt and would get frozen right away, right? I can't recall the exact technology, but basically this began the big push towards frozen foods. And in Massachusetts, it was actually in Gloucester, Mass, right? Home of the tuna fish. Frozen foods hit the shelves for the first time in Gloucester, Massachusetts. Company sold later on to Goldman Sachs for $22 million. Kind of interesting. Clarence Birdseye, his first attempt, Birdseye Corporation, went bankrupt about 2 years into it. No joke. 3 years later, the same company comes back now, introduces the same technology, but apparently 3 years later, people were into frozen fish. Apparently they didn't like the idea of frozen fish at first, but when he came back and did it again, kids, this is a lesson for you kids at home. What did we say yesterday about Winston Churchill? Never, 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 never give up, right? If at first you don't succeed, try again. If you don't succeed that time, try it again. We talk about this in the trade room, right? That's the difference between a successful person and an unsuccessful person. I can guarantee you're going to have problems. You're going to have obstacles. It's like I tell everyone in my office, don't bring me problems, bring me solutions. Problems are going to happen, so be ready for them. If you give up at the first time you have a problem, you're never going to make anything happen in your life. And that was a great example. Clarence Birdseye comes back from bankruptcy and sells his company for $22 million to Goldman Sachs. That was in 1930. Imagine how much $22 million was worth in 1930. Incredible, right? He's up there with billionaire status in today's money. And of course, this company, Birdseye Corp, later becomes General Foods, one of the biggest food conglomerates probably in the world, I would imagine. So a very remarkable story there in 1930 about the quick freezing technology. Goes bankrupt, comes back, sells it to Goldman Sachs for $22 million, and that little tiny company quickly or later on becomes General Foods Corp. That's pretty cool. That's pretty cool. And if anybody out there is wondering what the American dream was all about, that's it right there. That's the American dream right there. I've been to almost every country in the world. Never been to Australia or New Zealand, though, and I can't wait to go there someday. I've been all over the world, and I continue to remind myself what that American dream really is about. And I think even if you're not from the United States, even if you've never been to America, everybody knows that in this country, I don't care who you come from, who your grandfather was, I don't care what your pedigree is. If you get up one day and you want to be a doctor, a little bit of hard work and you'll be a doctor. You want to get up one morning and you want to invent the quick freezing technology and sell it to Goldman Sachs, you can do that. And that's what I love about being an American. That's one of the best things about being an American citizen, is that at any moment I can be whatever I want, and so can you. You can be a day trader, you can be a plastic surgeon, you can be an engineer, you can be a pilot, anything you want. So Clarence Birdseye, we salute you today. 1959, 20 years later, almost 30 years later, Texas Instruments invents or introduces the first integrated circuit, which of course we know today as the microchip. So Texas Instruments, 1960, invents the microchip. Very big battle went on after that between another company called Microchip Technologies. I put the link right there for you. And then this is a good one tonight. 1981, March 6th. I'll tell you, as a March baby, I'm a little bit younger than Mr. Cronkite was. The most trusted man in America. Walter Cronkite was the original anchorman. No, Will Ferrell wasn't the original. Walter Cronkite was the original anchorman. And it was famously quoted by saying, "And that's the way it is," right? If you ask I remember my grandparents watching Walter Cronkite, and of course there's all kinds of Walter Cronkite schools of journalism, and he is a very reputable person, even after passing away in 2009. Kind of an interesting tidbit here. He's the only non-NASA member to receive the Moon Rock Award, right? The Moon Rock Award is, of course, NASA's award for supporting the NASA space program. Walter Cronkite was a big endorser of the NASA space program, Known as the most trusted man in America, he retired this day in 1981 and, of course, was replaced by the dashingly good-looking Dan Rather, who was there until 2008 when he took a little leave there because of the whole Bush debacle. I'll let you guys do your research on that on your own, though. But definitely, we miss Walter Cronkite, a very prominent figure in our history. And then I thought this was pretty cool today. March 6th, 1997. Now, I didn't know that Queen Elizabeth was such a blogger. Apparently, she's just all over the web. She's got her... Anyways, I'm kidding with you. She launched the first royal website. The royal website. I wonder what they used to develop that website. Did they use AdWords? Maybe a little SEO? I wonder, how do they maintain that website? I put a link there for you so you can check out the royal website. In fact, I sent you to, if you click on that link below the video here, it takes you to some fun facts about the royal family. So always interesting here in this day in history. So thank you, Queen, for giving us the royal website, 1997. So busy day in history. Now, we got our own history to make for tomorrow. Let's get ready for tomorrow. Tomorrow, drum roll please, every month, the first Friday of every month, that'd be tomorrow by the way, we have non-farm payrolls here in the U.S. Non-farm payrolls are the most diverse. We've got labor, we've got hourly earnings, we've got unemployment report, we've got jobs added, the list goes on. The non-farm payroll report is one of the most robust reports. It's got a million different factors of it. I put a link right there for you on the blog so you can learn more about it. This is one of the two news events that will have long-lasting impact in the price action you see. Let's talk a little bit about tomorrow. Here's the plan. The reality is that as of right now, these markets should be flatlined. You're not going to see anybody trading here overnight. In fact, what I'll be doing in my chart review here in a moment is talking about getting technically and mentally prepared for tomorrow. Now, technically, we're going to go look at the charts here in a moment. But let's talk mentally prepared for tomorrow. This is really important. This is one of the only times when I'm going to tell you something along this line. First of all, we're not trading before the news. We may see some movement, but we probably will not see anything worth taking. So be aware right off the bat, we're not taking a trade until after the news comes tomorrow. Okay? It's because the volume is going to be too low. There will not be enough volume in the market to protect yourself. All right? No volume, that means you can't get out of a position. Okay? It's called illiquidity. Be careful this evening. Be careful tomorrow morning. I'm saying this because I don't want you to forget about this. So tomorrow morning, you see the price moving, be careful. You're more than welcome to trade, but I'll be waiting until 8:35 tomorrow. Then, after the news comes out, we've got to give it 15 minutes. Now, I know you're going to say, but Joe, it moves so quickly at 8:30. You're right. And it's too quick for most traders to be able to participate. The reason being has nothing to do with getting in. It has everything to do with getting out. Have you ever heard of that term, running stops, right? Well, that's what you're going to see tomorrow. When you try to buy tomorrow at 8:32, getting in won't be the problem. But if you pick the wrong direction, getting out of that trade is going to cost you. It is going to cost you a lot. And if your broker hasn't told you this already, right, let me tell you this right now. After the news comes out, your stop may not hold. This is a big important thing, guys. I don't care if my stop is right here. If this price goes through my stop, that stop is an MIT, market if touched. This is a big deal. That means that if this price goes through and triggers my stop, it becomes a market order. If the price sells off or if it rallies higher, immediately after this news comes out, there may not be a buyer for every seller. So where your stop gets triggered, if the price is falling and you're trying to find somebody willing to sell it to you, you're not going to find that. So be very careful tomorrow morning trading before and after. We typically get one of two scenarios on non-farm payrolls. Are you ready? Write this down. Scenario one is the news event comes out exactly as expected. What happens when the news comes out as expected is that we see a range-bound, consolidated market until about 15, 20 minutes after, and then we start to find a trend that we can participate with. So that's the first thing. Scenario one is the news comes out as expected. Scenario 2 is the news comes out outside of expectations. Now, here's where things get very violent and exciting at the same time. If the news comes out inside of expectations, we have been looking at this report for weeks now. So the market has already priced in what those analysts have been projecting for tomorrow. Does that make sense? So because the analysts have projected, they've been on news websites for a week now, we've been expecting 150,000 jobs for tomorrow's for tomorrow's non-farm payrolls. If we get 150,000, this market is going to sit. In fact, you're probably going to look at it and go, wait, what? Are my charts jammed? It's going to look like it hit the pause button. If we get it outside, this is the big one. If it goes outside of expectations, lower than expectations, higher than expectations, that's when I know you're going to see one of the most volatile and violent moves that you've probably seen all month. So be aware, if it comes out outside of expectations, it's going to be violent. It's going to be very violent. And what I always try to do is I try to wait until that price action slows down just a little bit so that I can finally find out what direction are we going in and then find those entry patterns to trade in that direction. So either A, it's inside expectations, it's already been priced in, the market will sit sideways, and I need to stay patient and wait for a break up or down from there. Or scenario 2 is the news comes out outside of expectations, above or below. We'll get a violent reaction to that. It'll be too violent to trade. I'm going to have to wait about 15 minutes until that price action calms down. Now remember, we are day traders, which means we use really small stops with big targets. I need to make it easy for you with a little $2,000 trade account to make some trades with me. So we use very small stops, low amounts of risk and big amounts of reward. Those small stops make it very difficult to participate tomorrow until after all that jittery price action calms down. So be ready for tomorrow. Be careful tonight. Be patient tomorrow morning after the news comes out. This is one of those news reports that you are going to need to dig under the surface, wait a little bit, and see how the market as a whole reacts to it. Oftentimes, the first reaction is the wrong reaction. All right, so be aware of that. Sitting on hands until about 8:45 tomorrow morning. And then hold on before we go. You've got to remember, this is Christmas for most traders, right? Maybe not Christmas. What would be a better word to describe it? Because a lot of traders don't even trade non-farm payroll Friday. It's a little bit like I wouldn't say a trader's holiday, but here's the bottom line. I'll think of a better analogy for it later. The bottom line is that tomorrow's a Friday, which means at the end of the morning session tomorrow, we are done for the week. Now, we are normally done for the week at the end of the morning on Friday, but tomorrow, don't be surprised if we see this thing die off a whole lot earlier. So between 8:45 and 10:30 tomorrow, 8:45 and 10:30, that's going to be your meat and potatoes. That's your sweet spot. That's where the good stuff's going to be tomorrow morning. Before the announcement, it's going to be dead. Immediately after the announcement, it might be dead, it might be violent. But that 15-minute window, 8:45 to 10:30, that should be your sweet spot. After 10:30, all those analysts, all those traders, everybody who's been gaming this for a week now are going to sit here and go, oh gosh, thank God, somebody give me a stiff drink and ship me out of here. Traders will go home early, right? Because most traders have been working up to this all week. And after that news comes out, they'll place their bets and you're not going to see them re-entering into positions going into the weekend. So it will slow down very, very quickly here today or tomorrow after about 10:30, 10:45, all right? So remember, on our best behavior tonight and tomorrow morning, 8:45 to 10:30, that's your sweet spot for tomorrow. The big movers tomorrow are definitely going to be gold, currencies, E-minis, everything. If I had to pick one that would be probably the least affected, it would be crude. The E-minis definitely because the equities. Gold, of course, because of currencies. And, of course, the dollar will be affected, which will affect the euro and any other currencies you guys are trading right now. All righty? So, now, that takes care of part one. I want to make sure, though, that we are technically ready. Now that we're mentally prepared for tomorrow, let's grab some charts and let's make sure we're technically prepared for tomorrow. Now, tomorrow, what we got to do is we've got to think this price could go $2 up or $2 down tomorrow, $3 down. So we got to get ready for a big wide range. So I'm going way up to 105. I'm going way down to 90, right? I'm going to look for those ranges because we don't need them right now, but we don't know what tomorrow is going to bring. I would be kicking myself if I saw price jump all the way up right to a resistance level that I didn't think was going to be needed. So pull it all out of your toolbox, guys, and throw on the chart for tomorrow. The most important thing is finding support and resistance levels that are outside that normal range to try to grab some reversals or continue some trends and use as a profit target. All right, so stick around, roll those sleeves up. I got some charts here for you guys, and we are just getting this party warmed up. Don't forget, non-farm payrolls tomorrow. Don't say I didn't warn you. Let's keep going. All right, guys and gals, thanks for sticking around here with me this evening. It's Thursday evening, the 6th of March. I got crude oil here in front of me, and we are ready to get prepped for tomorrow's non-farm payroll Friday. Now, remember what I said on the first part of the newsletter. Be careful trading here this evening. There should be no big money in the market right now, none at all. Because imagine if you were trading a big trade account. You had 1,000 contracts, other people's money, you're managing a pension fund, you're managing an investment fund, whatever the case may be. You cannot get out of your positions tomorrow morning before this release comes out. So you are borderline insane to be trading here overnight if you're trading anything more than 25 or 30 contracts, which sounds like a lot to your average, intraday new trader, but to a Goldman Sachs, to a Smith Barney, to a Citi, to a large investment fund, that's a very small contract size. So most professional traders are sitting on hands right now, and a lot of traders actually never even trade non-farm payroll Friday. So you may want to sit on hands tomorrow if this is your first time seeing a non-farm payroll report. So keep that in mind too. Now, let's take a look here first at the VIP chart of crude, a 30-minute chart. You can see here we are conveniently sitting right on top of the prior week low at 101.02. Almost as if to just laugh in the face of that 105 after coming all the way back down to that prior week low, right? Here was the Russia high. And then, of course, we tumbled right back down here just as we thought we would. So prior week high is up at 103.45, and we got, of course, the prior week low at 101.02. Now, most important thing we see right now is this big short covering rally at the end of the session today. When you look at the crude chart here, you can see we had this move down, right? That was pretty easy to see. And then sure enough, right about the end of the day here, we get this short covering rally. Now, we know it's a short covering rally because if you were listening to this last night, remember what I said last night? I said last night the sellers kept their positions. There was no short covering rally last night. And so that told me this morning that we were likely to see falling prices. Again, go back and look at yourself. You heard me say this last night. Because we had the low closing print and we didn't see a short covering rally, we expected it to keep going lower. Now, this is very typical here for a Thursday afternoon before non-farm payrolls because, again, like I said, traders are going to have to get out of their positions if they're worried about being in that position going into non-farm payrolls tomorrow. We had a 2-day relationship that was bearish, a somewhat typical range. We saw a closing print near the highs, which again, I probably shouldn't call it bullish. It's really kind of a non-issue because of the short covering rally. Volume happened in the middle. You can see here most amount of volume today was right in the middle. We had kind of a head and shoulders little look there for the volume that you see on the market today. Whenever we see the volume the most in the middle, it tells me we're pretty much balanced. So balanced price action today on crude, even though we did go lower and then rally at the end after traders covered their shorts, we did see the volume right about that prior week low. Now, if you remember me talking about this yesterday, remember how I said last night if we opened up below 102, we'd be going lower? Well, that's exactly what happened tonight. So everything that I talked about last night pretty much came true tonight. I wasn't quite expecting such a dramatic short covering rally, but it makes sense to me. So tomorrow, an opening print below the 100.13 is bearish. Above the 101, sorry about that. That should be 101.64. 101.64. Excuse me on that typo. So get me short here below 113. Long here above 101.64. And again, don't forget, crude oil opens up tomorrow at 9 a.m., which means that will be after that non-farm payroll report comes out at 8:30 in the morning. You can see here that I've got levels here for you. 102.07, 102.62, 103.21, 103.97, and 105.22 is that range high. So if you recall in the part number 1 of tonight's newsletter, I said to be ready for those extremes. So that's my extreme up top there at 105.22. Okay, be ready for all these levels. Even though we don't think it's going to go $5 tomorrow, we know that it certainly can. And then levels below us, we've got 99.70, 99.18, and 98.58, which you can see is right on top of this 98.54. So 98.54, a previous 30-minute swing there. So you can see we got levels down here that you can also use as support for tomorrow. So we got 3 levels above, we got 3 levels below. On top of that above, we've got the 103.97, and we have, of course, the 105.22 for tomorrow on your VIP chart for the crude oil. Moving forward here, we move now to our anchor chart. And our anchor chart, very, very important, because again, we want to be ready for whatever might come our way tomorrow morning. So what I always recommend in our trade room is before non-farm payrolls, plan for news to push price higher, lower, and sideways. So let's be prepared for higher, lower, and sideways. If we push higher, I've got 107.95. That's my resistance level overhead. Pushes lower, 98.09, 94.00. Those are 2 significant support levels below. If we go sideways here, we will be sitting on hands until, of course, we find a direction, whether it be up or down. So be prepared for all 3 directions that are possible after tomorrow's non-farm payroll report comes out. Again, if price pushes higher, I know where I'm buying up to, and I know where I'm looking for a reversal. If it pushes lower, I know where I'm selling down to, and I know where I will look for a reversal. So selling short down to our levels here, and then looking for reversals off them. It's all going to depend on the price action tomorrow morning. So if you're not experienced in reading price action, you've got to come out and join me tomorrow in the trade room in the morning, and we'll watch the price action together. And together, we'll learn about who's in control, and when that new trend develops, we'll follow that trend. So just get technically prepared tonight, mark up all these levels on your chart, and be ready for those levels tomorrow morning. Moving forward here, now down to the 21. The 21 definitely has a bunch of very important clues. You can see here I've identified, wrong button there. You can see here that we've identified major levels of resistance overhead, 106.24 and 105.22. I've got 104.64 and 104.13, as well as 103.28 to 102.68. So you can see those are 4 areas on my chart where if this news comes out bullish tomorrow, they will become profit targets as well as locations to look for a price reversal. Remember, we're probably going to see a big move, and after that big move, there will be profit taking, which means a big move up will always give you a chance to sell. A big move down will always give you a chance to buy. We can also see here that level I gave you last night. That's right, this 142 area. This was on the chart last night as well. So don't say I didn't warn you about that. I gave you 130 as my target on the blog last night. You can see here, though, 142 that was also tested as well. So almost made it all the way down to 100. Missed it by just a few ticks there today. So really what I'm looking for is if I didn't have non-farm payrolls tomorrow morning, I would recommend that we sell this 102.68 and take our profit off at this trend line. But again, as of right now, though, I cannot endorse any trading here this evening ahead of non-farm payrolls, and I'd be lying to you if I thought I knew what direction we're going to go tomorrow after the news comes out. So as of right now, we're moving lower. I would like to sell this 102.68. I would like to sell this 104.13. Right? Those are excellent locations to be selling short in a downtrend, but again, I'm going to have to wait to see what tomorrow's non-farm payroll report comes out as before I make any educated decisions on what direction or locations we're going to be trading on. So unfortunately, tonight's newsletter, it's all about getting prepared. And then below us, we've got this, again, 142 to 99.81. I've got 99.14, 98.82, and I got 96.82 and 96.51. Boy, I'll tell you right now, anybody out there filling up their gas tanks, we would love to see that 96 area here back again. It's only been a few weeks since we've been there, so easy up, easy down. So hopefully tomorrow we'll get a nice big push down here for all the soccer moms out there. Let's keep going. Final chart here now, the 13 anchor. And again, a lot of what we're doing right now is being prepared tomorrow morning. Right now, though, we have everything we need here to start selling. You can see here we get everything we need to start selling. We're at a sell zone. I have a target below me at 155 to 135. So we're in a good spot right now to be selling short. We had this big run down. Remember, we never like to sell at a discount, right? We sell at a premium. So right now we are at a premium price right now, running right into the sell zone here. So if it wasn't for non-farm payroll news, expecting some sloppy markets here overnight, I would recommend a short here at 101.83 down to 155, down to 113, down to 98.64. 98.64 is where we go here if we don't make a new higher high. All right, as long as we don't go above 102.32, if we go lower here, 98.64 is our immediate target for the downside. So once again, I've got resistance levels overhead, 101.83, 102.32, 102.68, 103.28, and 104.13, 104.64. Again, these are areas where if we are moving lower, I want to sell at a premium. Those are the premium price locations I'm looking to sell at right now. But again, like I've said here, I sound like a broken record this evening. Be careful. Be careful. Tomorrow's non-farm payrolls. Every major asset manager is sitting waiting for tomorrow's news. Every wise speculator is doing the same right now, and I hope that you'll do the same thing too. So tomorrow, we got non-farm payrolls tomorrow morning at 8:30, in case you hadn't heard that yet. Non-farm payrolls tomorrow morning. I'm waiting until 15 minutes after the news comes out before I place my bet. That way I'm not getting sucked into that emotional reaction, very illiquid tomorrow morning at 8:30 to 8:45. But then after 8:45 tomorrow, that's when we start to look for those patterns. 8:45 till about, we'll say 10:30. It could be as late as 10:45 tomorrow morning. But in my previous experience, and I've been doing this for quite a while now, 8:45 to 10:30 will usually be the best time of the session for you guys tomorrow. And then again, after 11 o'clock, 11:30, things will start getting real slow because most traders will take off early tomorrow on non-farm payrolls because they've been working their behinds off all week getting ready for it. Alrighty? Don't forget here, guys, to join our blog. Don't forget to register on our website for our free trial. Join this newsletter over at sidewaysmarkets.com. And above everything else, have a fantastic non-farm payroll Friday. I don't do my newsletter on Friday afternoons. Yeah, they let me out of my cage every once in a while here in the office, so no newsletter tomorrow. I'll be back here Monday, though, for the next edition of our nightly newsletter. Don't forget to send me your feedback. I love the feedback. The last time you guys sent me feedback, I listened, and we made some big improvements. So what do you want to see more of? What do you want to see less of? What do you love? What do you hate? Send it my way. I can't wait to get your feedback. But guys, have a great non-farm payroll Friday. Be careful out there. We'll see you guys on Monday afternoon, or come out and see me tomorrow morning in the trade room. My live trade room opens up at 8 a.m. Eastern Time, Monday through Friday. That's 8 a.m. Eastern Time, Monday through Friday. We begin with our morning routine at 8 a.m. tomorrow, and we will be ready to rock and roll for non-farm payrolls. I wish you guys the best tomorrow. Have a great weekend. Take care of your family and friends. Be well, be happy, and remember to learn it so you can earn it with me tomorrow in the markets. Signing off now, guys, from our corporate office here in Los Angeles, California. My name is Joseph James and the entire team here at School of Trade. Have a great weekend. We'll catch you on Monday. Adios, amigos. Bye-bye for now.